in the assisted living space, right? I've used the SBA 7A and the 504 for people looking to acquire an assisted living facility because it's what's called a business acquisition. And typically the real estate is attached. So it becomes almost a combination where we're giving them enough money to buy the business, buy the real estate attached. Maybe the property needs a little pepping up, another 100 grand, we can tag that into the equation.
Hello, friend. Welcome. My name is Carline Cadet Francois from Florida Assisted Living Consulting. We help busy professionals open thriving assisted living communities throughout the state of Florida. We are the organizers behind the Assisted Living Caregivers Conference, the annual conference for Florida caregiving entrepreneurs. This conference usually sells out. Check the link in the description for more information for the 2026 two-days conference. We also build community inside of our Thriving Circle community. It is the most affordable way that you will gain direct access to me every month. Check the link in the description for more information on this. Today, I am here with an amazing guest. And before we dive in, I would love your help in reaching our first 5,000 subscribers. So if you find any value from the information that we share, please consider to like, subscribe, and share it with a friend that will find it valuable. I am so excited to bring you Eddie Mohamed. He is the president and CEO of Alliance Business Solution, a business concierge company dedicated to helping entrepreneurs and organizations access capital and build recession-resistant businesses. With a diverse background in banking, finance, and risk management, Eddie has spent his career serving the business market, building an ecosystem of funding sources, including banks, private lenders, private equity, investors, and hard money lenders. His mission is to help clients become capital ready, and we will go into this later on, avoiding costly mistakes and achieve long-term financial success. Oh my God, Eddie, this is so powerful right here, this bio. Welcome to the Florida Assisted Living podcast. Can you please introduce yourself and tell us a little bit about you?
Thank you so much for that wonderful introduction, Carline. Yes, I'm Eddie Mohamed. I'm the president and CEO of Alliance Business Solution. I created my company dead smack during the pandemic, July 2020 to be exact. Helped numerous businesses secure PPP loans and EIDL loans and ERTC refunds, just to assist them, in that survival mode. And I've always enjoyed interactions with business owners because both parents and grandparents are small business owners. So I've always had that affinity with business owners and wanting to help them, grow and thrive in any economy. So, what I bring to the table is 20 years of banking experience, 20 years plus of banking experience within the commercial credit, commercial lending space. I'm proud to say that I can do business nationwide and cater to a variety of segments. So not just this industry or that industry, pretty industry agnostic, if you will. But I really pride myself on being a problem solver and getting to understand the client's objectives, needs, challenges, and formulating some, viable options that make sense for the situation.
I love that. I love that. And so I had to do my research for this podcast. And of course, we've spoken in the past, and I'm looking at the things that you do when it comes to dealing with money and helping people get funding for their endeavors, business endeavors. And I'm like, this is so amazing that you've dedicated your career to helping people access capital so that they can achieve their dreams. What inspired you to dedicate your career into that realm of business?
Again, during my banking career, I learned different aspects of banking because I entered at a very early age. And I think once I got my first taste of commercial credit and commercial lending and saw the effect it had on helping businesses, fulfill their growth agenda, it felt very fulfilling to me personally to be part of that journey, right? Because I feel every business goes through a journey, the infancy phase, startup, they grow, and then before you know it, they become, a giant and either pass it on to the next generation or package it and sell it. But it's very cool to be part of that journey, very fulfilling, very satisfying. And during the pandemic, I got to observe some pretty disturbing behavior with the big banks kind of leaving the little guy out and not really helping folks with, especially the PPP loans. It was almost like a direct, instruction to say, hey, take care of our big clients first and then work your way down to the low guys. So it was almost like a mission, I want to help these folks. And that's what drove me. What I witnessed during the pandemic, I was like, wow, the small business owners really lost out in the cold, with the banking segment. So, I'm happy to give that helping hand and just be their advocate in their corner rather than somebody just, shoving products down their throat.
Yes, definitely. COVID opened our eye to so much. That's all I would say about that. But when it came to people that had businesses, a lot of businesses went underwater because the people with the bigger budgets, the bigger monies, they were taken care of first. And when it comes to everything in general, that seems to be how things normally work itself out. But it's inspiring to see how you now dedicate your business to helping everyone that build their businesses to succeed when it comes to the funding aspect of things. Now, I know that you are a small business administration SBA lender, and you provide quite a bit diverse lending options. Can you tell us a little bit about that? What does being an SBA lender entail, and what should the audience know about it?
All right. Yeah. So the Small Business Administration, they're huge proponents of helping the business sector, and because they know they create jobs, right? So anytime a business is looking for funding, ultimately adding more staff as part of the equation. So, I've done SBA lending throughout my banking career, and it's a core focus of what I do now. And I'm more of the intermediate, if you will, between the lenders and the client, but I do have access to a variety of lenders on a national level. So I bring to the table a lot more options. I get a lot of bank turndown deals from local banks that I'm able to place with out-of-state banks or other private lenders that, have more liberal guidelines, right? But the SBA lending, one of the reasons I like about it, it's very pro-business because they know small business creates more jobs, period, right? So the more loans from the SBA I can fulfill for clients either looking to buy a business, expand their business, buy machinery. Every time there's a credit request from a business for more capital, it's ultimately a flag for growth, and that growth ultimately involves more hiring, right? So ultimately what we're doing is fulfilling their growth agenda, which will result in more jobs, more profits, more growth in that sector. So again, it's very fulfilling to be part of that journey and to help facilitate that process.
Absolutely. I can attest to that, because the minute you become a business owner and you want to remove yourself from the day-to-day, you definitely have to have staff. You find yourself, you got into business thinking you're creating a business, but then you realize you're creating opportunities, you're hiring staff, you're adding funding to different people from society. And then at some point you look at them like you look at the people that you care about in all of your decisions, because the way that you manage your money will affect them. So it's amazing to see that you're playing a part of that when it comes to the small business SBA loans. How do one become qualified? I do know that it's not a one size fit all, but in general, how would someone become qualified for those type of loans, SBA loans?
That's a great question. So there's some core criteria, if you will, and every so often, depending on changes within the government, they tweak it based on what's going on, the default rate of past loans, and so on and so forth. So I can tell you that a business seeking a SBA loan must be in business for at least, I would say, about 3 years, showing profits. So they're in a revenue producing phase. They're not a startup, or they're not breaking even, or not, they have to show some level of profits because they're seeking capital for growth, right? So they're showing that they can make it, but now they need that extra push to get to the next level. So tax returns will be examined. The ownership's credit profile will be examined. Obviously, I would say it's safe to assume that they're looking for 680 or better. The ownership immigration status matters now. So a long time ago, you can have two owners of a company as long as one was the majority holder, was a citizen or green card holder, even though the other party was a visa holder, the deal went through. Now 100% of the ownership needs to be a U.S. citizen or permanent resident status, aka green card holder. So the immigration status has changed. The credit criteria has been raised. I think you used to get away with low 600 in the past. Now it's 680 or better. Tax returns need to be solid. P&Ls need to be solid. Balance sheet. It all needs to show that there's steady growth, right? So if they examine your first year in business, second year in business, third year, they need to see a positive trajectory that you're year in, year out having, a double-digit type of growth happening, so they can justify the credit request you're asking for. Because under certain dollar amounts, whether it be 350,000 working capital or less, it's processed under what's called the Express guidelines, the SB Express, and they're typically, you don't have to be a homeowner, right? If you exceed 350, you must be a homeowner and you must agree to them putting a lien on your house as a secondary measure of collateral. So the guidelines change when you go past certain dollar tiers, right? Business owner, so it's an education process that I go through with the client, so they know what they're getting into, ins and outs. I like clients to be educated, informed. I practice, clear and transparency with all my clients, because at the end of the day, I want them to be my endorsement when the deal is done, and hopefully refer me to friends and family and other business owners. So want to make sure they get the right fit, know what they're getting into, knowing how they're going to use the capital. Because a lot of them simply say, we're just seeking this amount, but then when you break it down, how are you going to use it so you can, show a reflection on your bottom line that this loan that you took into your business for 250, 300, $500,000 has resulted in, a multiple effect, if you will, right? So it's definitely an education process. It doesn't happen overnight. The typical SBA loan nowadays, it can run you anywhere from 45 to 90 days. So there's a lengthy process. So if a business comes to me and they're in dire straits of capital, sometimes I may have to look at other options that are faster. Also, I have a lot of business owners that come to me saying, hey, I want an SBA loan. I don't want an SBA loan. We review their status and I discovered they're not eligible. However, I do have a second option similar we could look at. So, having that consultative approach and getting to know the client, their need, their objectives, their challenges is very crucial, because it helps them understand why they are or not eligible for a certain product. But it could also educate them and enlighten them to say, hey, you know what? I need to work on these following things so I can position myself in a year or so to be eligible. So I help them through that as well.
This video is brought to you by the Florida Assisted Living and Caregivers Conference. It is an annual conference for all those who want to open an assisted living right here in Florida. We bring you all of the who's that will help you achieve your ALF. We have caregivers, we have people that already have their assisted living up and running, and they are here for resources. We have caregivers caring for mom and dad at home, but lack resources, so they show up for more resources. We have investors that are in the room looking for partnerships because they don't necessarily want to manage, but they are looking for someone to do the day-to-day while they can do the other investments. We also bring to you all of the sub-industries, those providers that help you get your ALF up and running, the providers that will come to your ALF to provide services to your seniors. We bring everyone in the room for the first time. This event normally sells out. Click the link in the description and I will see you in the room of that, because oftentimes we don't know what we don't know until we go for what we think we want, and then we learn, oh no, you need X, Y, and Z, and you're like, well, I wish I would have known that. And for those listening, now you're at front seat listening and learning what you need to know to be able to, one, structure. We had a tax professional right before this recording, and she mentioned dealing with lenders when it came to her portion of the tax structure or the way that she does the taxes. So check out this video. You'll find it valuable. But you mentioned a few things, because once you establish what you need to know, and you have the education, even if you're not able to get what you wanted at the time, you still win because now you have knowledge, you know what you need to do, and you have someone that can help you to achieve that. You mentioned that they put in the, of course, these are different amounts, but for the lien process on your house, how does that usually work out with business partnerships?
Right. So again, so each partner, any partner in a business that holds a 20% or greater stake in the company is basically on the hook to be a full guarantor on the loan. That's in the eyes of the SBA, right? So let's take an equation. We have four partners, all equal, so they're all 25% apiece. They're seeking $1 million, right? Obviously, the SBA, obviously, they're going to put what's called a UCC blanket lien on the assets of the business, and if the assets of the business are not covering the full loan amount, the difference will be made up by putting a lien on the partner's houses. Now, if one of the partners rents and the other three are homeowners, the one that rents actually gets a pass, right? However, in the future, if he buys a house, they're going to put a lien on it. But the lien is not as bad as it sounds. Basically, it gets recorded right behind your current mortgages and on the deck pages of your insurance policy as a lien holder, because it just makes people realize, hey, you know what? This is a serious deal. I took this debt and with good intentions, and I must make good on it because I'm borrowing from the federal government. So it's more of kind of a reality check, saying, hey, you're entering a serious contract here, and you got to put your money where your mouth is, right? You want to borrow this money from the government for your business, well, be willing to step up and have them put a lien on your house as collateral. There are collateral deals where under the 350 mark, you can get away with the non-homeowner. So you can be two partners that are renting, but if you do own a property, they are going to put a lien on it, FYI, right? But you could have almost zero equity, and they'll still put a lien, and they'll say, fine. Let's say you have a first mortgage, a home equity, they'll go right behind that home equity in the third position. But again, it's just a way for them to kind of secure their interest in the money they just lent you, and just say, hey, just be cognizant. You borrowed money from the federal government. Please make good on it, kind of thing. Once you pay it off, they'll release the lien. If you decide to sell the house, they release the lien, and they'll just simply apply it to the next house. So it's not the end of the world. Oh my God, they're putting a lien in my house. They're really coming after me. That's not really the intention.
Yes, and if you plan to pay the loan, which you should not worry about it, because as long as you keep paying, it's not a problem. And I know there are also benefits, and there are different, we'll go into the different type of loans that are available for this SBA. There are some benefits of having an SBA loan. Can we go over some of those?
Yeah. So for example, in the assisted living space, right, I've used the SBA 7A and the 504 for people looking to acquire an assisted living facility, because it's what's called a business acquisition. And typically the real estate is attached. So it becomes almost a combination where we're giving them enough money to buy the business, buy the real estate attached. Maybe the property needs a little pepping up, another $100,000. We can tag that into the equation. So the key benefit of SBA lending is it will include all the capital needed to fully operate a business and give you reserves for those ramp up periods, 6 to 9 months up front. So you get into business day one, turnkey, ready to operate. You're fully funded. A lot of people realize, I shortchanged myself. I put all my liquid into the business. I put all my savings into the business, and now I'm in business. Things are going good, but I need that little push, and nobody will lend me money. Exactly. You should have got the money up front, and the SBA does that for you. Give you that money up front.
And I know there's also the interest rates. There's a difference in interest rates too. Is there anything you want to say about the interest rates?
Yeah, it's very comparable. In the commercial space, they use the Wall Street Journal prime rate as the key indicator with some type of spread attached to it. So what that means is, if you notice, the Feds met on the 17th, they lowered it 25 basis points. Now the prime rate is 7.25%. Now a year and a half ago, not even a year ago, but right before the elections, it was 8.5%. And systematically it went down, down, down. So commercial loans in general and business loans, including SBA loans, are priced on prime plus a spread, right? That spread is determined based on the final outcome of your credit and evaluation. So let's say, to make numbers even, you get an SBA loan that's prime plus 2. What that means, it's whatever the prime rate at that moment in time, plus 2% margin is your rate. So 7.25 plus 2, 9.25. Right. So that's your rate. Not bad, not terrible, not great, but it is what it is, right? But if you compare it to other loan options, it is reasonable, right? And the cool thing is certain SBA programs are market sensitive. So as the feds continue to lower the prime rate, every quarter your rate resets downwards, almost like an adjustable rate mortgage. And there are fixed rate programs as well. So when we reach what we feel is the bottom of the market, that's when I encourage my clients to refi SBA loans they have on the books to fixed SBA loans, or to come into that moment in time with a fixed SBA product, because that point in the market is deemed like the low point. It has a lot of flexibility, and I will tell you this, one flexibility I've personally noticed is the working with the business owners as they go through hard times, right? A lot of banks kind of say, hey, you either pay, you're in default. The SBA is very, very reasonable and very, very flexible with clients that are experiencing what I like to call economic hardship. Maybe business hasn't been good as of late. They will give you forbearances. They will grant you extensions. They will suspend pay. They will do everything in their power to avoid a default. They don't like defaults, and they will avoid it, and they will work with you, plain and simple. Most banks on conventional loans will not work with you. Some will try a little bit, but not to the level the SBA is willing to go. I've seen them go way out of their way to be very accommodating for folks experiencing hard times. So keep that in the back of your mind as you compare loan programs. The SBA are going to be the ones that are going to work with you through the hard times and accommodate you when you need a little break, a little breather. I need about 90 days suspension of payments until I catch my breath. They will do that for you. Others won't.
I love that. And majority of my clients are the residential type of business structure. What are some things that they should be aware of in order to be qualified for SBA loans, keeping in mind those things that you mentioned earlier about the qualifications?
Yeah, every just to have all their ducks in a row from a legal perspective, compliance, as long as the business is running compliantly and the lender is aware of that. The lender usually has a certain checklist to go through of due diligence. As long as you match what's in there, and as long as you know what the things you need to do to operate from a compliant perspective, I think you should be in good shape. If you pull the proper licenses, the proper permits, the proper insurances to operate the business, you have all that in place. I think you know that you should be in good shape. If you've been cutting corners, now it's time to get your ducks in a row.
I agree. And Jody talked about that too. So I love that. So let's go into some of the types of loans that you provide. We know that the SBA requirements for new businesses, I have a big chunk of my audience are people that are getting into the business for the first time. So what are loan friendly products that you have for newbies into business that don't have the qualifications for an SBA loan, for example? What are some products that you have that they can get into?
Well, when you're new into a business, we have templates that we provide them at no charge to fill out for projections, business plan, marketing plan. You have to show a resume that has relevancy between your past experience and what you're about to get into. Case in point, somebody who's been a nurse 15 years and wants to open an assisted living facility, there is a level of relevancy between the past life and the new business they're looking at. But when somebody who's been a master chef, a head chef at a restaurant that wants to open an assistant, that's a little bit tougher to swallow, unless he wants to run the kitchen at the assisted living facility. So we just have to match shift everything up. The package is a little bit more intensive because we're selling the deal to the lender, saying, hey, we have a startup here. Here's the people involved. Here's their credentials. Here's their financials. Here's the projection of numbers, so on. And then there's folks out there that can help you with projections. Your own accountant sometimes can do it. So it's a full package that you present to the lender to sell the deal, to say, hey, it's a safer and more solid deal if the real estate is attached. So, for example, I have identified a property that can be converted into an ALF. I need money to buy the property and the conversion, and there's a more solid of a startup than saying I'm going to rent the property or I'm going to build one from scratch, right? Because now you got permits and zoning and stuff to worry about. So it really depends on the nature of the deal and what have you. But it has a lot to do with relevancy of your professional background and the business you're about to get into. Obviously, you need good credit, and you're going to have to fill out what's called a personal financial statement, which is almost like your personal balance sheet. You have your assets, your debts. They want to see what your net worth is, right? And seeing if you have reserves to support you after we get this business running, right? There is usually a down payment component of the deal, and that's to be determined. If the property is owned, the down payment is much less versus if it's a startup with nothing, no property at all, the whole thing. So a lot of components to consider, but every case is different. There's no one size fits all, but we just got to take a look at the candidates, what their plan is. Some candidates come to the table very well prepared. Some don't. But the good thing is you have free resources like SBDC, SCORE, a lot of different organizations out there to help the entrepreneurs with those pieces to get yourself ready.
Okay. Can you tell us a little bit about those resources? You mentioned SD.
Yeah.
I haven't heard.
SBDC. So the SBDC is the subdivision of the SBA. Typically, what they've done systematically is open up offices in every major university. So let's take Florida, for example. There's an office inside of FIU, FAU, USF, University of Florida, Florida State. Usually it's located in the School of Business, and it's a government-funded program where you have, they can help you, assist you with the business plan, the marketing plan, what eligible grants that you may qualify for as an entrepreneur. So yeah, again, the thought process is these entrepreneurs are going to create small businesses, and these small businesses will create jobs. So why not help them out? So SCORE is another organization that's connected to SBDC, and it's basically an organization full of retired C-level executives and corporate executives that kind of want to give back, right, by coaching young entrepreneurs. So if you're looking to be coached and mentored and you don't have the budget to pay somebody, join SCORE. You'll get coached and mentored for free.
You guys heard that, right? Because it's all about education and resources. And I'm about to look into all of this myself so that I would know how to help you, who I can connect you with. That's what it's all about. Like it's the saying that your network is your net worth, because sometimes as individuals, we can squeeze ourselves into a corner. The world is not how you live it. The world is just what you've experienced. But there's a whole world out there. And if you don't have the right resources and if you don't have the right people to help you, you can get stuck. Okay. Thank you for sharing that. That is super amazing. What about the loan products that you have? What are some different types of loans that you offer?
Yeah. So within the SBA family of loans, you have what's called the 7A product, which I believe is probably, I would say 70% of the production in the marketplace right now is 7A products. So the 7A chassis, you have the Express, you have, it's typically issued as a 10-year term or a 25-year term if real estate is involved. Some local community banks can issue an Express as a line of credit, but it's at their discretion, and it has pretty intense criteria to get it because the product is not very lucrative for the bank, so they try to make it very, very hard to get. So your typical 7A products will come in, for the most part, in a 10-year format or a 25-year format. 504 is used predominantly for real estate and heavy-duty machinery because, again, it's issued in 10, 15, 20, and 25-year amortization. It's pegged directly to the bond market. There are certain debentures that they tag it to. It can come out pretty attractive, but they're reserved typically for the large dollar tickets. I'm talking $1 million and up. I seldom don't see any 504s under $1 million. Very rare. 7A is designed to go Express. The layer under Express is called Micro, which is 50 to 15, and then it goes to Express, then full traditional. Then there's what's called USDA, which you almost never see. That's for rural areas like farms and stuff like that, or areas that have very low population. But that's the SBA family in a nutshell. Now, outside of SBA lending, I also do machinery financing, private loans, what's called factoring. So companies like manufacturers or wholesalers that need financing for their purchase orders, their receivables, those are called factoring. Or once in a while, we get an established company that says, hey, we're tired of leasing the warehouse we operate out of, we want to buy a warehouse. So that's a commercial mortgage to buy a warehouse or build a warehouse. Or we have a piece of land we see here, it's been cleared to build on. We want a loan that covers the construction and the buying of the land and then convert. So pretty much any loan you can think of that a company or business would need, we can help facilitate. And again, I am not the bank. I have contractual agreements with a multitude of lenders nationwide, well over 100 lenders. So I typically can find something suitable for everybody that comes across my desk.
Nice. Love that. So when it comes to, for example, majority of my clients, they fall into two categories. You have some that already have multiple residential buildings, and then they are buying another building to start their ALF. And then you have those that just have their primary residence and they want to buy a building to start their ALFs. Where would they fall under the products that you provide in general? And what are some advice that you would provide to them?
Right. So there's definitely going to be a down payment, right? It's going to be anywhere from 10 to 25%, if depending on the borrower's profile. Now, sometimes the numbers work better as a 7A or the numbers work better as a 504. We just have to run the numbers and see which one works more favorable for you from an interest rate perspective and terms and overall loan fees and closing costs. 7A has the flexibility of giving you more money to do more to the property. So again, if the property needs some light renovations, maybe it needs a new roof, new AC, paint job, expansion, the 7A has room for that. The 504 typically just a straight up purchase, like turnkey. But again, the minimum, the small down payment component is what makes the SBA attractive on the regular bank loan for that type of transaction. 10 to 15% range, yeah. Sure, there's other pieces, but again, the flexibility of lower down payment and the flexibility of getting funding for other parts of the project that's outside of the structure itself. Basically, just renovation or upgrades or repairs can be financed into the equation. A typical bank doesn't want to do that. Typical loan will simply say, no, listen, what's the value? Here's a percentage that we're going to lend against, and the difference you just come out of pocket. And then you buy it and you deal with it after that. So I think the SBA wants to help you get in a position where you buy something turnkey, truly turnkey. Like you really buy it, do the closing and open the doors and get ready to do business.
Yes. And I absolutely love that because my clients do need money to put back into the building. They need to convert the building into ALF structure that is for the homes of the age. And that comes with money for fire alarm, fire sprinkler, generator. All of these things are expensive pieces of the puzzle, but that's not all that they need money for. And so knowing that they can add those expenses into the loan amount goes a long way. But earlier, we talked about the qualifications for the SBA. If someone is a newbie and they won't qualify for the SBA, where would they fall under the products that you provide?
Right. So it depends. Again, not every newbie is alike, right? So sometimes it's somebody who maybe came from the medical field and say, I'm brand new to owning my business, but I've really been wanting to do this for a while. Or somebody that came from a whole different business, let's say corporate America, and say, hey, I want to give this ALF thing a try. I've been looking at, I've been reading on it and I want to try it. So it depends where you are in your journey is how much work we have to put into it and where can we go. There may be options at that point in time ready to go for you, or you may be not in a position to qualify for any options, but we may work with you to get you there. So it's down to the individual level and where their background, where they are today, and then that snapshot of time. Remember, products get introduced to the market and products get taken off the market. So what I propose to you today is only relevant to the moment that we're in, right? Next year, there may be a whole lineup of new products and some products that I have access to this year, they get taken out. So it's all about the relevant, that moment in time and that person in that moment in time, what they look like is really what's going to come down to it.
That is so true. And what is fascinating about it is the fact that you have the access and the connection to be able to say, okay, so you may not fall under, for example, the SBA. Perhaps there are private lending and different types of lending options. Do you also have or work with those type of lending structures as well?
Yeah, and it's one of the reasons I'm constantly building my menu of lenders, because lenders you introduce new products, then take away products, then introduce guidelines, then make it, make the guidelines tougher, tone it back. So the best thing to do is to constantly add to the menu, so we can have kind of access to the latest and greatest and the most beneficial option at that present moment that's relevant to the client's need. Yeah, so we're constantly on the lookout for new options and new lenders and so on and so forth.
Love that. And
Yeah.
with that said, what does capital ready means, and how do someone become or remain lendable?
That's a great question. So I really want to use a metaphor of, relating to somebody who's physically fit, right? So when a person that's physically fit, they eat right, they always drink plenty of water, and they find themselves, they function well, right? So a business that's well capitalized always has money for reserves, basically in a position to act whether they're faced with an opportunity or a challenge. Their ability to act is really they're based on their cash flow, right? So case in point, if you're a company and your crosstown rival is for sale, if you're in position to buy your competition, you're in capital readiness, right? If you're not in capital readiness, you gotta be like, oh God, I wish I had the money and I would. So it's just an overall being of, having all your ducks in a row reserved, your cash flow is healthy at all times. And I equate it to somebody who simply drinks plenty of water every day. If you're well hydrated, half the health problems you're avoiding, right? You function better, you sleep better. So I say a business that's well capitalized is just like a person who stays well hydrated. So the capital is the hydration, is the water to keep that business hydrated. And then by practicing that year round, you just kind of put yourself in a capital readiness type of state. And that's a really good place to be.
That is amazing. I love that metaphor, by the way. It is so true, because every quarter you look at the numbers and you're like, and even for me, sometimes I'm like, how did I come from boots and guns to like watching every number, every expense? And it's like, I hired a mentor when I left the sheriff's office, and she taught me how to be a proper business owner. Thank God I did that, because you can completely mess it up. And before you know it, all the money is gone. And you're like, what's going on? What did I do? So you find yourself monthly, at least every quarter, watching every penny, doing projections. And I'm not even trying to get a loan. This is just me trying to hydrate, right? I find the biggest challenge for my caregivers, because they can hire me and hire you to help them with the loan process and educate them of what they need to have in place and what they should avoid, and even do for them sometimes certain of the steps. But then once they are up and running, they can get so caught up in the day-to-day of caregiving that they neglect the business aspect of the business. So even beyond starting the business, if you want to remove yourself from operating, you still need to hydrate yourself, right? You still need to make sure things are in order. Would you say some of the biggest challenges, would you say, when it comes to funding, someone like that would have? I think we touched base on it a little bit earlier, but how can they better prep themselves financially?
Well, the first step in the process is to set proper expectations. I think sometimes people go into something with the false expectations, and then they wind up just in a state of shambles, right? So I'm very big on setting expectations with my clients and letting them know this type of thing takes this long. This takes it, so that way they know their timeline. They go into it with proper expectation. I thought that's the first stage. Obviously, delivering expectations that we can, and then managing the expectations. How are we doing? Did we execute? Did we achieve these items at these parameters? Or are we dragging a little bit? So having checkpoints, and then making sure the person is engaged, committed, and disciplined, right? It's the most frustrating thing to see a talented business owner who's not disciplined, because it's almost like you have to be almost like hold them by the hand and make them accountable. And at the end of the day, they're like, listen, you're in business for you and your family. I'm just here to help, but I feel like I'm having to do far beyond mentoring here. So expectations, the right behaviors, the right actions, and obviously checking points to make sure our progress is on par with what we've laid out. There are certain things in this life that are in your control, and there are certain things you kind of leave in God's hands. So I'm here to work on those things that were in our control, right? But in order for it to be in our control, we have to monitor and check in and check in and check in. We're going into this thing, the business journey. I love being a part of it, but I warn people, you got to be in it all in and focused, heart, soul, energy, the whole nine. It's not going to be easy. If it was easy, everybody would do it. It will be rewarding if you do everything you're supposed to do.
Yes, and
right?
discipline goes a long way. I love how you put it. It
It's
is so
huge.
perfectly said.
Yeah.
I mean, discipline goes a long, long, long way.
Yeah.
And sometimes we can have this false narrative, what you have in your head as to how it's going to work out. If you don't properly plan it versus what it actually end up looking like, you wouldn't believe the stories that people come to me with. And I'm like, no, that's not how it works. This type of business involves hard work. Yes, it can become passive, but you have to, like you said earlier, set the right types of expectations. What is your ideal lifestyle look like? What does it look like versus the reality you're going to go through? And sometimes I find myself almost like being the party pooper, where someone comes to me all excited, and by the time they get off the call with me, they're like, and I'm like, but I'm responsible for telling you the truth. I've seen it, I've done it, and I know the idea that you have, it's not the reality that you're going to face. And even for lending, they come to me with different scenarios. Without going too much into that, what are some red flags that people should watch out for when dealing with certain types of lenders in certain types of too good to be true scenarios? What are some advice that you have?
Don't commit to anything. Don't sign anything. Do your homework. Be vigilant. What you mentioned earlier, also mindset, right? Some of these folks that come to these meetings, and we have to be kind of harsh with them because we're giving them a reality check, right? And we're trying to see if they have the mindset for this, the right mindset. And again, with setting expectations, I have to set expectations because if you have the right mindset, you're going to agree with the expectations I set forth for you, and not feel that they're being harsh or this and that. But if you come, hey man, this is easy, I'm gonna do this thing and I'm gonna make a boatload of money, and all I gotta do is this, and you got it all figured out. You got like a quick rich scheme. There is no quick rich scheme here. Magic formula. There's no magic formula. So,
and I must say that they want to be completely passive.
Yeah, I don't want to lift a finger. I'm gonna have other people run this business. I'm gonna sit back and collect check. I'm like, yeah, it doesn't quite work that way. So I hate to be the party pooper, but I'm here to give you a reality check, and I'm here to really see if you're a right fit, man. Because I gotta tell you, you are way off. Like, entrepreneurship is not for everybody, and I hate to be the one to deliver that message. But some people come into this thing saying, yeah, I've been reading and I think I should do this. I think I got what it takes. I'm like, do you really have what it takes? Have you spoken to other people that are doing this? And it's grinding. You're gonna build it, make the sacrifices. That BMW Lexus ain't gonna happen for another 5-10 years, brother. You're in there. You're in it to win it, and you got to build this thing. And so you got to be able to make sacrifices. Be disciplined. I think person who demonstrates great discipline to me is a reflection of their mindset. The two are tied together. I love disciplined people. I love ex-military, ex-police people because they come with that. I'm ex-college football. There is a level of discipline there, but people with zero discipline scare me a little bit because they're not going to do half the things I recommend for them to do, and they're going to do it all wrong. It's going to blow up in their face, and then they're going to point the finger at me crying. And I'm like, I told you not to do that. I told you to do it this way. It also helps me and you determine, is this a person we want to work with? Because I don't want to see my hard work go in vain, and I don't want to uphill battle. So I want somebody who's coachable, disciplined, stick to the plan, trust the process, do this thing, and it's going to work out. And if you're not ready, you're not ready. I gave it to you straight. Here's what it needs. You're not ready? Cool. Let's work on getting you ready. You have some stubborn people, hard-headed, and I'm just like, whatever. We're just looking for to help good people do it. But, make no mistake about it. A saying my football coach in college used to always say, there's no substitute for hard work. All right. So knowing this as an entrepreneur and working for yourself, there is no substitute for hard work. Hard work is a must. But with the help of Carline and myself, we can help you work smarter so you can get more out of your hard work.
I
That's
love
all
that
I got
so
to say.
much.
Yeah.
I love that so much. I love that so much because let me tell you, like I left my past career so that I could help people. You wouldn't believe I've had to give people back their money in honoring my quality of life because I am like very focused mindset, not even the sky is my limit type of person. So when I have a client, I'm working on the whole client. I am working on motivating you, teaching you, educating you, making sure that you you don't need me to go out there and do well. That's how much I'm educating you. But it does something to my mindset when I see someone, you take the time out of everything to nurture that person, to educate, and you say, go out and do X, Y, Z. They don't do it. And then when you ask why they didn't do it, the excuse is very lame. And then and then you're like, that is affecting me now because now I'm taking time out of my most valuable, precious time, right? Time is your most valuable resource to nurture you, to lift you up, and you're just taking it for granted. Here's your money back. Go find someone else that can deal with that because I honestly cannot. In the
And
level of,
and with me, it's even worse because I only get paid if they get funded. So
oh
I'm on
yes,
contingency. So I work almost like an
yes,
attorney, right? Contingency.
yes.
If the case settles, we all get paid. If the case doesn't, so I'm like, listen, I have a vested interest in your success. I want to get you the funding because the minute you get funded, I get paid. If I get you funded, I get nothing. So I've done all this work for free. So if I'm going to put in all this work for free and taking that risk myself, I want to make sure that you're worth it.
Yes. And you know what? That's an asset to them because they know that you are invested in helping them succeed. And not everyone is meant to make it. Honestly, that's just how life is. And so my job half the time is to make sure that those who are meant to make it, who are doing what they're supposed to do, I take the time. I'm giving you all the resources. I'm not taking time away from you and giving it to somebody else that's just going to do nothing with it anyway. I love that we share that mindset. And I want to ask, what is the big difference between, I think you covered it just a little bit, but I know some of my audience maybe want to hear a little bit more clarification on this. Difference between funding for new like a startup ALFs or business versus an existing ALF that want to expand.
Okay, so the existing one is probably easier to describe first. First, the lender wants to collect financials to see if the purchase price that they're asking is appropriate based on their numbers. Then they're going to look at your numbers as an individual borrower to see if you're an eligible borrower. So there's a pre-qualification from a financial perspective on both sides. With a startup, it's all going to fall heavily on you, the individual looking to buy or build or this and that, like your resume, your experience, your financials, your credit, reserves, everything. So the process is different. It's almost like an evaluation process, right? But in one scenario, we have an existing business looking to be sold and a prospective buyer, which could be one of your clients, right? We have to, and the lender will analyze both sides financially. So if the seller is looking to get $2 million for this ALF, we need to validate that that's a valid purchase price, but based on their 3 last year's returns, the EBITDA, the numbers, and the multiple they're asking for. The incoming buyer, we're just going to make sure he's a good borrower and that he can run the facility properly, and the facility can produce enough revenue to pay for the debt. So it's an evaluation process. The evaluation just differs between the transaction type.
I love that. I love that. And I've dealt with both sides where some of my clients are selling because they're tired. They've been doing this for so long. They're at the age of retirement. They're out. They want a new buyer. And then I've dealt with people that are starting from scratch. And I've dealt with people that are joint venturing. So there's a lot of moving parts. With all of that said, I love how you explain the two. And I would say, what are some mistakes that you see people do when it comes to those two options that you covered? What are some mistakes that you see they?
A lot of false expectations, usually due to lack of research or being misinformed. So if they're misinformed, I can't blame them, right? It's whoever lied to them or misinformed them. But lack of research, it's kind of like shame on you. You need to research what you're about to get into and make sure you're eligible. So I'd say just if you don't know, go out there and seek the knowledge or reach out to a resource like yourself to seek the knowledge. That way you can't use the lame excuse of I simply didn't know. The knowledge is out there, just go seek it. If you've been misguided, I would seek a second and a third opinion. It's the same thing like a doctor telling you that you need an unnecessary surgery. You're not going to jump into the surgery room right away. You're going to get a second and third opinion from other doctors. So treat it in that same fashion. Do your homework, do your research so you can start to set expectations for yourself and realize, is this a path I want to pursue, or maybe I'm in over my head. Maybe I shouldn't do this. Let's just set the right expectations. Yeah. Do your due diligence, so on and so forth.
I love that. And lastly, if someone is a bit intimidated about the funding process, what is your best advice for them?
Make sure they have a good CPA and a good a business attorney in their corner that'd be willing for maybe a nominal fee to execute certain things on their behalf. Because not everybody out there is a whiz when it comes to filling out paperwork and this and that, but the loan process is paperwork intensive. So if you don't have the mental capacity or the patience to articulate it and fill it correctly, do yourself a favor and pay somebody that would do it on your behalf, like your CPA. So every business owner out there should have a solid CPA and a solid business attorney in their corner. So you need legal advice and tax advice ongoing all the time as you're getting into anything. Just make sure those folks can fulfill certain documentation on your behalf. That way make your life easier in the lender as well. So that's typically same thing. If you lack a certain skill, just team up with somebody that has that skill to complement what you have.
I love that. I love that. When I'm every time I get to a new growth phase, I need to become someone else. And all I do is I find someone that have done it and is doing well at it. And I say, can I pay you to teach me? And I'm not trying to be, spending time. Can you teach? Can you coach me? Can you do for me? That's kind of like what I try to provide to my audience. If you watch someone by their actions, it gives you a little look into their mindsets, right? And so you mentioned business lawyer. We've had one on the podcast. And of course, people can Google some in their area, look at their reviews. We try to provide resources so that people can get unstuck. And I'm very grateful that you spent this time. I learned a lot. I always end up learning so much. And I feel like it's not even fair. I have people on here and I end up learning so much. Me and my audience are learning together. And we're grateful that you take the time out of your busy schedule to spend it with us here. How do my audience find you? They'll find you at the conference, by the way. You're one of our speakers. But before that, how do they connect with you? How do they find
So my
you?
website, be sure to share my website. It's alliancebusinesssolution.com. So my website, you'll see all the information about different loans. You'll see my profile. You'll even have the opportunity to click on one-to-one via my website if you'd like to. I'd say my website is my biggest resource. It's almost like my online brochure, so you can get a better idea of all the different products and services I offer.
Yes, and we'll put the links in the description as well. And I went on there and I didn't get lost. So your website is pretty good with explaining,
it's user friendly and
user friendly.
Exactly. And again, my contact information is there. A link to my calendar basically is there. So yeah, all the information that you can wish to get will be there.
Absolutely. I love it. Yes. So thank you for spending this time with me and Eddie. I know that you will find this valuable. Don't keep it to yourself. Share it with family members, share it with friends, share it with anybody that will find value in it, because You may not have done what me and Eddie have done, but if you have this resource, which is this YouTube, and you share it to your people, that's you adding value to them. Let Eddie know what was your biggest takeaway when you reach out to him. And I will see you in the next one. Thank you for spending this time with me. Talk
My
soon.
pleasure.
This video is brought to you by the Florida Assisted Living and Caregivers Conference. It is an annual conference for all those who want to open an assisted living right here in Florida. We bring you all of the who's that will help you achieve your ALF. We have caregivers, we have people that already have their assisted living up and running, and they are here for resources. We have caregivers caring for mom and dad at home, but lack resources, so they show up for more resources. We have investors that are in the room looking for partnerships because they don't necessarily want to manage, but they are looking for someone to do the day-to-day while they can do the other investments. We also bring to you all of the sub-industries, those providers that help you get your ALF up and running, the providers that will come to your ALF to provide services to your seniors. We bring everyone in the room for the first time. This event normally sells out. Click the link in the description and I will see you in the room.